All right, Nitin, just stay with us. Let's get in Mayuresh into the discussion as well. Mayuresh, what's your reaction to these numbers? The NIIs, they look better than expected. Provisions, though, as Ekta has been telling us, they are ballooned up. What's your take on it? The stock has recovered from the day's low.
Afternoon, Nigel. So clearly, I think the numbers that NII front have exceeded our expectations. We were expecting a 19% growth, close to 3,928 odd crores. The PAT figure, bank in line with estimates, we are assuming a 19% growth to 1982 odd crores. The provisioning, again, I think is something, as the other analyst was mentioning, I think we need to check the line items on where the additional provisioning has come from. But apart from provisioning, I think the asset quality more or less in line with what we were assuming for this quarter.
Are you really that happy with the asset quality compared to previous quarters, Mayuresh, in terms of the worsening? Because they've maintained it the past previous quarters, so it wouldn't sort of worry you at all. And will that premium for Axis Bank continue, or will the premium possibly increase in this fiscal because of the asset quality being maintained?
So clearly, I think the asset quality was, as I said, more in line with what we had estimated. And again, I think we do not expect meaningful restructuring. I think the management is already guided to that. Even if you go by last year's figures on net slippages that came through, 6,500 crores is what they had guided. They actually came out with 5,500 odd crores. So I'm not too worried in terms of the absolute number that has come through. I think it is not a number that I'll be too worried upon purely based on an absolute figure.
Okay, just a piece of information. What has actually offset the higher provisions seems to be an overall growth in terms of the NII, which has supported Axis, as well as the other income, which has increased 36% this quarter to close to 2,300 crores. 2298 crores is where the other income has come, and compare this to 1691 crores in the same quarter last year. So it's a growth of around 36% on the other income, and compare this to last quarter where the other income was 21% higher. So it's definitely the other income which has helped in terms of the profit this time. So Nitin, overall, what would you like to hear from the management in terms of Axis's numbers this time?
Quality guidance they gave, especially on the stressed asset formation side, because in FY15 was particularly a good year for them, so they beated the guidance by quite a margin. And though in Q4 they have restructured quite a lumpy figure of close to 1,500 crores, but how the slippage trend remains from the restructured assets and what level of stressed asset formation can happen. And also love to see some guidance on the margin front also, given that the margins for most private banks are running close to the peak levels, and given the pressure that is there in terms of base rate cuts that has already happened, deposit costs are pretty sticky. So what could be the trajectory going forward on that side?
What were you estimating on other income? Is there a particular reason why we could have seen a particular 36% rise in this quarter?
Yeah, other income has also come in very strong. We were expecting close to 1,900 crores. So they have delivered close to 2,300, I believe, and which is way higher than what we estimated. So we need to see the final details. It could be due to either the treasury gains or the much stronger FX income, which is what we have seen with, say, HDFC Bank also. And so we need to look at the details there.
All right, Mayuresh, what will you be looking out for? We'll be hearing from the management the next couple of hours. The stock, in fact, has recovered close to around 3% from the day's low. So what's your take on it?
Things. I think one, as the other analyst was mentioning, the guidance related to how the asset quality pans out, what numbers they're looking out in terms of stress addition. Secondly, I think the outlook on how the loan growth is expected by the bank and the kind of credit costs that they envisage going forward for FY16. We have assumed in our estimates 80 bits of our credit costs going forward as per the earlier management con call. And clearly, I think in terms of the asset quality itself, I think what is the situation specifically on the infrastructure exposure. So I think these 2-3 things is something that I'll watch out for.
Okay, just leave us with your last word in terms of the results, Nitin, and if you could also add what your valuation or what your stock call is on Axis right now with a possible target price.
The rating has been, we have been maintaining a positive stance on Axis. Our PT is close to 620. So that leaves around 6-7% upside to the current market price though.
Okay, and overall, how would you qualify these numbers based on what you've seen?
Really need to have more details on provisions and the write-offs, if any, during the quarter.
Okay. And what about you, Mayuresh?
So clearly, I think we are maintaining a positive call on the stock. Numbers more or less in line with estimates. So we're recommending or retaining a buy rating on the stock with a target price of 716. Though I think, as Nitin was mentioning, we need to look at the finer details when it comes to the provision.
All right, Mayuresh, Nitin, thanks so much for joining and giving us all those details. The stock, in fact, has recovered from the day's low. But before we slip into a short break, just pull up United Spirits. That stock, in fact, has taken off as well. It's higher by close to around 6.5%. A big move has come in the last few minutes. Slip into a short break, come back. We'll continue focusing on a lot of your queries. Stay tuned.
CNBC TV 18, celebrating 15 years of leadership.